some of the language we're hearing, the Chinese talking about being blackmailed by the United States, the U.S. in danger of losing its senses, the Commerce Ministry says in China. The United States saying they no longer want to be taken advantage of. Tough language on both sides. So the speed at which this is developing surprise investors, do you think?
Well, I mean, it's been building over the last year. I think Trump needed some victories under his belt, and now, again, he's pushing very aggressively on the first push in terms of this negotiation, as I think we have to view it. However, this is starting to have real impacts in terms of actual tariffs being implemented, and it means that we could be on the edge of something a bit bigger, because the market started to price it in, and you're starting to see the first shocks, I think, within it.
And is there any way to hide? Is there any place to hide? I've pulled up this chart on my Bloomberg, which is the Russell 2000, extending its lead over the stock benchmark, the S&P, amid U.S. China tensions. So clearly some investors finding some haven, if you like, in amongst those mid-caps, those smaller companies in the United States. Is that the kind of place you can hide, or does it come back to hurt those businesses at some point?
I think at some point it does come back to hurt those businesses. I mean, this trade's been a mixture of things, but of course, hiding in domestic U.S. seems to make more sense if it's America first, as opposed to the big multinational corporations. However, I think that what you see is that at the start of the year, it was global synchronized growth. Everything's going swimmingly. Cooperative game. Now we're moving to a more competitive, negative-sum game, where the Eurozone's got pressure from political sides. You have a potential trade war. You come up with a very high base with that global synchronized growth. So eventually, these tensions will come down into this part of the market. I think where you'll see the positivity is probably on the bonds, in terms of actual flight to safety.
And that's what we seem to be seeing this morning. We're also seeing a little bit of money. I was going to say money coming out of the dollar, but actually dollar weakness has been pared back a little bit this morning, but we're still a touch weaker on the dollar, but not with a great deal of conviction. What is the implication, do you think, for the dollar? Is this dollar positive because it's seen as a haven at this time of turmoil, or is it dollar negative because investors are not sure what to expect from the U.S. administration and not sure where the Fed conversation goes, how that is impacted?
Well, I think that if the Fed conversation is impacted by this, it'll be impacted negatively in terms of the hikes that we expect will be pared back. That might mean that you have a scenario whereby actually yields drop in the US, but the dollar appreciates here. Why? Because the euro will actually come under the most pressure. If you look at the German balance of payments and kind of trade with the US, if you look at the political uncertainty, the dollar's weakened a little bit today because of the yen as the initial flight to safety. However, I think long-term, this is a structurally dollar bullish story.
Structurally dollar bullish. And is that because, I mean, what's changed since, I was talking last hour with Jane Foley about what's changed since 2017, because a lot of the conditions she was saying were in place for the dollar to be stronger last year, with the yield differentials being set up across the Atlantic, for example, but it didn't quite happen. But it's happening in 2018. What's different now then, Emad?
Well, I think that in 2017, again, you had this kind of cooperative, everybody is going in the same direction, global growth synchronized, global kind of easing coming. That switched now towards more a story of Europe is in trouble. You have potential trade wars where we don't really know the scenario, but we know that everybody almost certainly loses out. And again, we're coming off this very high base. So the dollar strength that we're seeing now, I believe, will be driven by different factors to the ones that have driven the weakness in the euro that have led to the strength in the dollar recently. It's just going to be another extension. What
worries you most this year then, Emad? Are you preoccupied by trade? Are you preoccupied by what's going on in German politics? Are you preoccupied by Bitcoin? I know this is something we've talked about often, and certainly the BIS had some scathing remarks about the viability of Bitcoin into the future.
Yeah, so I think, look, trade is first and foremost now, because this is an unpredictable scenario whereby, again, we assume a deal will be done, but these tit-for-tat tariffs lead to very unstable equilibriums. So it tends to be that when this happens, the markets shift, and then they just shift again very rapidly. And, you know, as hedge fund managers, we like volatility, but you have to be prepared for it. I think on the Bitcoin side, look, I exited the market in January. I think I came on this show. I think there's still further to fall as, for example, competitors to Ethereum come. They're 1,000 times faster and 1,000 times cheaper. That can knock the market down again. But that's not a big structural thing. It's more a localized asset.